All right, greetings. So today is October the 20th. It is, as you can see here, it is 11:47 a.m. Got into this, I actually put on an iron condor, which is, as you guys should know by now if you've been watching the videos, iron condor is a combination of a vertical call credit spread, which is here, and a vertical put credit spread, which is here. So for the vertical put credit spread, I sold at 36.20 and I bought the 36.15. The width of the strike prices is 5, and I sold 4 contracts for that vertical credit spread. The call credit spread, I sold at 37.50 and I bought the 37.55. Again, same number of contracts that I sold and the same width on the strike prices, which is 5. So I put this trade on around 9:45 a.m. I'm sorry, yeah, 9:45 a.m. Roughly 15 minutes after the market opened, and the price actually jumped up to about 37.35, which is rather close to the my short strike on the call side. So you have the call side here, and you have the put side here. Right? These are your strike prices down the middle. So just show you guys a chart here. So this here is a 5-minute chart. Okay, so here's a 5-minute chart. So one of the indicators that I like to use, or that I use pretty much every day, is these Bollinger Bands. And these Bollinger Bands represent, so this here is the lower Bollinger Band, and this here's the upper Bollinger Band. And these Bollinger Bands really convey, they're sort of like, they're analogous to, if you think about it in terms of a basketball court, right? Anything outside of the upper line and the lower line is considered out of bounds. So what you'll see is when the price of the underlying begins to go outside the bounds of the Bollinger Bands, you'll see it start to, if it gets really far outside of the Bollinger Band, you'll see it start to come down and basically work its way back inside of the Bollinger Band. Because the upper and lower bounds of the Bollinger bands represent an extreme move. So anytime the price of the underlying, and the underlying in this case is SPX, which is what I've been trading for the last 6 weeks to 2 months, the price of the underlying has a tendency to stay inside of the Bollinger Band, right? So that helps me to gauge which strike prices I need to select, whether it be on the call side or on the put side. So having these Bollinger Bands on the chart at all times is a great way to determine, as I just mentioned, where I need to be positioned in my vertical credit spreads, because all I primarily sell is vertical credit spreads. Right, so I put on this trade and I took in a credit of $240. Right, so as you can see here, my P&L was actually down. My P&L stands for profit and loss. I'm actually down $72, and the reason being is because the price of SPX is rather close to the price, to my strike price of 37.50. Now, the closer the price is to your position, the more valuable your position becomes. And this is the reason why you'll see your P&L actually, be in the red. Now, if the price of the underlying begins to pull back in value and pull away from my vertical call credit spread, then you'll see my P&L begin to turn green. And so the idea is for an option seller, which is what I am, which is what I primarily trade. I don't like to buy options. I like to sell options, because when you buy an option, you have to be right about the direction in which the underlying moves. But when you sell an option, you're just looking for the price of the underlying to stay within a particular range. Okay? So as an option seller, I'm looking to sell an option contract or a vertical credit spread, or let's say $100 or whatever the credit is. And over time, I'm looking for the price, I'm looking for the value of my position to decrease, right? So I know it's counterintuitive because, you know, most of the time when folks invest in the stock market, they're looking for their shares of stock or their position to increase in value. But as an option seller, I'm looking for my position to decrease in value, because if I take in a credit of, in this case, $240, if I need to close it out early, and in order for me to make money, I need to close it out or buy it back for less than the credit in which I received. So if I received 240, I want to buy it back for, let's say, 120, right? And walk away with the difference of $120. So that's the objective of an option seller, to sell something for X number of dollars and to buy it back for less than what you sold it for, so that you can walk away with a net credit as opposed to a net debit. Meaning that if I sold this for $240 and if I have to buy it back for $340, then I'm gonna lose $100 on that particular trade. So right now, as we can see here, the Bollinger Bands earlier today were really rather far apart. So that conveys that potentially there could be a lot of movement from the underlying, right? Meaning that the price could change significantly, considering that the Bollinger Bands are far apart. But as you can see here, they're beginning to close or contract and come together, conveying that the movement or the expected movement is beginning to stabilize, right? And so you can, as we progress throughout this trading session, we don't necessarily expect for there to be a lot of movement from the price of the underlying, considering that these Bollinger Bands are beginning to contract. So hopefully, that makes sense. And I also have a position on in my Thinkorswim account as well, because I trade both accounts, and so I have $130 on that particular account. But I will show you guys that as we progress throughout the day. So I'll come back with an update. So it's 12:07 p.m. now. So as you can see, the price of SPX is beginning to pull back. As you can see here, it's pulling back. And so, as I mentioned before, when the price of the underlying begins to pull away from your position, whether it be on the call side, right, or on the put side, whether it be on the put side, your P&L will benefit from the price being far away from either position, whether it be on the call side or the put side. So as we can see here, now the P&L is in the green now. So now, whereas before I was down, I think 70 or 80 bucks during the last video segment, I'm actually up $140 now of the 240. So if I actually were to close it out now, I would have to buy it back, as I mentioned before, right? But when I buy it back, I'm going to be buying it back for less than the credit in which I received. So I can walk away right now if I wanted to with $172. But I want the entire 240 bucks. If we look in my Thinkorswim account, so I'm up, should be up. So I'm up in the Thinkorswim $120. So I'm looking to basically walk away today with $360, which is my goal pretty much, for my trading every day, is to make between $300 and $500. Greetings, I'm back. So it's roughly, as you can see here, it's 145, and the price of the underlying SPX has moved back, or has pulled back significantly. As you can see right now is at 36.75 and some change. It's actually, coming down. I'm not concerned about it, testing my vertical put credit spread. It's only a little over 2 hours left before the market closes, so I don't foresee the price of SPX moving. Roughly 55 points within the next 2 hours. So I don't think that's going to happen. So it's pretty confident that I'll be walking away with the entire $240. So right now I've made 91% of that, which is 86% now, which is 208. And in my swim account, I've made so far $125. So things are going well. Like I said, I expect to get the entire credit that I received in both accounts. But yeah, so hopefully you guys are actually gaining some value from viewing these videos, and you are beginning to see the value really in knowing how to trade. And of course, it takes some time. It may look easy. It may look like I'm just selling these vertical credit spreads on the put side and the call side, and just making this money relatively easily. But I've been doing this for quite some time, so it's really about getting a feel for the market, how the market moves. It involves screen time. In other words, the amount of time that you spend, just observing how the market moves. With respect to news and also macro events that take place. One being, the Federal Reserve Open Market Committee meetings that take place every so often, sometimes roughly 5 or 6 times a year. So just the years of experience watching the market, seeing how it reacts to certain news events, certain macroeconomics, certain events that the government propagates. All of those years, it makes it look relatively easy, but nevertheless, it takes some time learning how to trade the market, particularly how to trade options. But as I always tell my students, man, it's a very valuable skill set to have. Let me just say this: when this flu virus was declared a pandemic back in 2020, and the government shut down the economy, pretty much locked the entire country down, with the exception of certain, big box corporate companies that were allowed to stay open, like Target, Walmart, etc. And also, ironically, they allowed for liquor stores to stay open as well. So you had your liquor stores that were still open when the entire economy was shut down. But nevertheless, one of the other things that was still open was the stock market, right? And so while folks were locked in their houses, not being able to work, businesses were shut down, and so folks couldn't serve their communities and make money. Stock market was open, man, and so I was trading. As a matter of fact, during the pandemic, during that year and a half, roughly 2 years, I made more money in the stock market than I've ever made, doing this. And I've been doing this since 2014. So knowing how to trade the stock market, in my opinion, is extremely valuable. Now, again, it takes some time, but nevertheless, just like with anything, it takes time, to learn it. But once you learn this, as I have mentioned before, you'll never be broke, right? And as long as you are able to control your ego, right, understanding that sometimes you're gonna make a wrong judgment, so you got to close out a trade for a loss. As long as you're able to control your ego and accept when you're wrong, yeah, man, this is definitely a skill set that you want to acquire. Now, it's not for everyone, but for those folks who are viewing these videos, I'm surmising that you have an interest in learning how to trade the market, right? So I do teach this, but nevertheless, I'm doing these videos to kind of give you, to provide you some value. And if you are familiar with trading options, just me, showing you how I'm putting on these trades and some of the thoughts behind the trades, it might give you some insight and some perspective on how to improve your trading. But nevertheless, if you don't know how to trade at all, then, again, you can visit my website, which is down there, cubicleinvesting.com, and, you can learn how to trade options. I do have a free ebook that you can download that teaches, that gives you the basics of how to trade options. But nevertheless, is nothing, it's going to teach you how to trade options like, then basically trading options yourself and also having a mentor, so if you're interested, definitely visit my website, and you can take the course. The course is relatively cheap, and so yeah, definitely a great skill set to have. But yeah. All right, so this is going to be my last update. It's 2:58, so roughly 1 hour before the market closes. Pretty much, you can pretty much bank on the fact that I'll be walking away with the entire $240 here. So, but right now, considering that we still have 1 hour before the market closes, the P&L was showing $232. But yeah, it's not the price of SPX. Price of SPX is not going to drop down below 320 within the next hour. So pretty confident that I'll walk away with the $240 here. And then in my my Thinkorswim account, I've made the entire $130. So essentially, when the market closes today, I'll walk away with $370. So again, making $300 to $500 per day. Learning how to do that can be life-changing for a lot of people. I'm sure you guys have probably seen, some folks online in these YouTube videos making sometimes $2,000, $3,000, $5,000, sometimes as much as $10,000 per trade, and that's great. That's it's levels to this thing, right? It's levels to this game. But nevertheless, being able to make $300 to $500 per day, every day, 5 days per week, that's life-changing for a lot of people. So yeah, and it's not very difficult to do. Again, like I said, once you learn. But yeah, so we have 1 hour before the market closes. I got to get out of here. So last update. Yep. So walking away with 240 here, although it's 220 right now, and 130 in the other account. Eventually, I will be scaling up. So I will be, pushing the limits a little bit beyond the $300 to $500 per day mark. Maybe shooting for like between $500 and $800 per day. But again, it's all about taking small steps, being consistent with your wins, and also knowing when to cut your losses rather quickly. So again, if you are interested in learning, my website is below. You can definitely download the free ebook and read about the basics of options trading. And also, when you download that free ebook, you'll be put into my database, and you'll start to receive my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time, where I'm talking about finance, economics, etc.